morning, ladies and gentlemen. I want to welcome you all to the Kenya Deposit Insurance Corporation Town Hall Homa Bay edition. I would kindly ask of you to really pay attention because we're proceeding to the panel discussion where we will be able to understand more about the Kenya Deposit Insurance Corporation. So kindly be attentive, and should any questions arise from the panel discussion that you have, we will then have a bit to come to the live audience where we will be able to answer your questions. Remember, this bit of the panel discussion is being streamed live on Mayenga FM. So to moderate this panel discussion, I would like to invite my brother Chris Pasiankem. Karibu, tumpe makofi anapokaribia.
Habari zenu. Good morning. Allow me to recognize the presence of DVC, Tom Mboya University. I think yesterday, with the permission of the CEO, we had a very, very fruitful engagement, and that has given forth to some of the community that you are seeing here today. So karibuni sana to the state. We really want to declutter, and this is the essence as to why we are here. Eunice Kitchen, this is actually your question. What exactly or who exactly is KDIC?
KDIC is a short form for Kenya Deposit Insurance Corporation. It is a state corporation within the National Treasury established under 487C laws of Kenya. The mandate of KDIC, or the main purpose for which KDIC does exist, is to provide assurance or to provide confidence for the depositor who deposits the money in a bank that is licensed by the CBK or a deposit-taking microfinance institution, that in the unlikely event that the bank fails, the depositor does not lose the entire amount of money. So therefore, our intention is to build confidence, and by doing this, we know when we save our money in safe financial institutions, and when we have that confidence, we have the money that would be flowing in the economy, and therefore the economy would thrive, we would grow, there would be confidence, and there would be safety in the financial sector in the country.
All right, I think with that explanation, we've looked at who KDIC is, and we've also touched in bits and pieces about the mandate. But allow me now to bring on board Director Paul Manga. The two mandates. I know there is the deposit insurance and bank resolution. Kindly demystify the two for us.
Thank you, Chris. I think I want to pick from where my colleague Eunice has left. Most of deposit insurance basically is a program that is established by the government. It's a government program which is meant to protect the depositors and by promoting public confidence, and secondly, contributing or fostering what we call financial stability, just like Madam Kiche has just explained. Now, the question is that there are two cardinal things that deposit insurance is supposed to achieve. One, protect the depositors from bank failure. I know you've been hearing what we call people talking about bank failure, but what is a bank failure? Bank failure is when a bank is actually closed by the central bank and it collapses because of various other reasons. That means it's unable to meet its obligation. When you go to that bank, you're unable to get your money. So deposit insurance comes in to protect your small deposit which you have placed there, such that if that bank is unable to reimburse you your money, it's unable to allow you to withdraw your money, so you can actually walk to KDIC and get that money. The second one is promoting what we call financial stability or fostering financial stability in the country. I want to mention that in our Vision 2030 of this country, one of the economic pillar of the Vision 2030 is, economic, where we want our economy to grow at 10% and above. But now, how do we get there? The government has created or is intentional in creating, a vibrant and globally competitive financial environment that will be attractive to investors, and also because it's attractive, it's also going to help encourage or promote saving culture in the country. To do that, you as a depositor, you need to be guaranteed that when you take your money to the bank, you are not going to lose that money. So KDIC has developed a couple of layers of protecting you as a depositor. One layer is what we call the proactive, where we make sure that there is, I think Madam Kiche talked about risk minimization in the law. I didn't understand, but I know she talked about risk minimization. We are trying to make sure that that bank do as much as you can to make sure that it doesn't fail. How do we do that? We constantly monitor the activities of the bank together with central bank and other government agencies to ensure that if there is any problem that develops in that bank is detected in good time and some intervention is done. Then the second layer of protection which we normally provide is what we call promptly resolution. Promptly resolution using tools which does not necessarily mean that a bank is closed. So there are a couple of banks that you've seen either changing names, others being, merged, others being acquired, just like that, quietly. So there is a lot that goes undercurrent to make sure that this resolution of this bank, which has been identified as a distressed bank, as a struggling bank, is done quietly without bringing it to the public to say that the bank is having a problem.
One wonders now, this deposit insurance, is it a global concept or is it just something which is unique to Kenya?
Thank you, Chris. I think the deposit insurance is a global concept which started back way 1933 in the US. But exactly right now as we speak, over 190 countries have embraced the deposit insurance. And, Kenya started the deposit insurance system in 1985, which followed a series of failure of banks. And from that time, we have been running with this concept. We have been, growing from the first stage, the second to right now we are at the apex, which we call the risk minimization. So there are other stages which we have we've grown through over the last 30 years. So it's a global concept, Chris.
All right, thank you so much. Let's now address the question of the coverage limit. Because I know initially you had alluded to the fact that it is about 500,000 shillings.
Thank you, Chris.
What informs that?
When the deposit insurance started, our limit was 100,000. That is 1986 when the deposit KDIC started as a department in central bank. But then after some time, in 1986, 100,000 was a lot of money. But over time, there has been economic changes. There's inflation and all other things. Someone who was earning maybe 100,000 that time, I don't think there was anybody who was earning that money. So the reason what has informed the change of our limit or coverage limit is the economic changes, which includes even our GDP right now, the per capita and all those, the inflation.
The success story around resolution, how does it look like? Especially given the fact that KDIC has been in existence for some time now.
So one of the most critical success factors is having paid the most recent bank that went under, that is Chase Bank, having paid them a minimum of 500,000 Kenya shillings, the reviewed amount. That is the most critical factor that I can say is a success factor.
Well, currently you have about 19 institutions in liquidation, right? And I understand the directorate which you represent here today has made quite a lot of progress in terms of payments. Walk us through that journey. How do the numbers look like and what should we expect?
The numbers, they look great, right? For example, for the 19 institutions that we are currently managing, 7 of them, we have paid them what we call dividend payments. Apart from the protected payments, we also make subsequent payments to them that in our jargon, we call them dividends. These are monies that we pay to depositors and creditors as the liquidation process continues. As of we stand, we have paid over 450 million Kenya shillings to the 7 institutions that we are currently managing as a corporation. Recently, we started making payments to 3 institutions, right? And of those 3 institutions, we are making payments to over 22,000 depositors, right? And of those depositors, we are projecting to pay over 98% of the total amount they had in those banks, right? That is over 98%. We are going to make for that payment. And then currently, as we speak, there's a bank that went under, that is Imperial Bank. We are currently making payments, the protected amounts, right? We are currently doing that, the 500,000. The bank that I talked to before, it was Chase Bank. We paid over 650 million right now of what we had anticipated to pay to the depositors. We are projected to pay a billion shillings, but right now we have paid roughly between 650 million and 680 million, and we are continuing to pay.
Thank you so much, ladies and gentlemen. This is the KDIC Town Hall meeting coming to you live from the county of Homa Bay. The question around the challenges of payment. This is actually a pain point to so many people that you speak to. Why is it so that resolution of one problem bank takes quite a long time? What are the challenges?
Thank you, Chris. One of the main challenges of payment of deposit to the depositors or meeting of the money with the owners has been the fact that not so many people know about KDIC and what we do. That is one of the reasons, as the CEO mentioned earlier, why we are here, because we want you to get to know what we do, so that should there be anyone who knows a depositor who has not received who has not come to claim their payment from KDIC, can get in touch with us. Another challenge or pain point has been protracted litigation. Many of these banks go under with we take over the banks which may sometimes not have proper records, they may not have proper practices, and so because also the depositors do not understand the concept of deposit insurance, you find many of them rushing to court, sometimes to stop the process, while not understanding that really this is in their interest. I think those are the two challenges that I can highlight, Chris.
Maybe Wakili, very quickly, as we talk about challenges, let's talk solutions. What are you doing in the immediate?
So in the immediate, as I said, we have rolled out such campaigns. This is not the first one. Over the last 1 month, we have been interacting with the people, coming to the people, as opposed to waiting for the people to come to us. The KDIC board and the leadership has come up with policies that address issues to do with the negotiations of the debts and out-of-court settlement of some of these cases. Because you may find that a bank liquidation process is halted by maybe 1 or 2 major cases that, you know, with the processes that sometimes take long to conclude in our courts. So the board and the leadership have come up with strategies and policies, and we are actively now rolling out of court settlement of the cases. Also, we are engaging the judiciary. We are doing stakeholder engagement. We are picking key stakeholders, not just the judiciary, the people who make decisions, which decisions can interfere with the process of conclusion of the banks. We have done a mapping, and we have identified our key stakeholders. We are going out to them. We are saying who we are and how we can get assistance from them.
Thank you. I want to believe that when you're talking about solutions, and you might have alluded to it, ADR is part of it, right?
Yes, I have.
You may want to expound on that just a bit.
Okay. ADR stands for Alternative Dispute Resolution Mechanisms. If you are following what is this current judiciary is keen on, the judiciary has been keen on unclogging the court system and ensuring that the easy to settle disputes between people are sorted out in the available mechanisms that are not necessarily in court before a judge. So in an ADR setup, you have different types. You have mediation, conciliation, you have negotiations. So for KDIC, what we would do, allow me to use an example so that it comes closer home. Assuming Geoffrey owes Bank A so much amount of money, and Geoffrey has not been able to pay this amount for some time, and this amount is standing on the way of the collection of the deposits that can be paid to Paul. So we have available mechanisms where we can sit around a table with Geoffrey, and Geoffrey would narrate his story, would say that perhaps I'm able only to raise so much within so much time, and we have a team that is dedicated, that listens, and resolutions are made, decisions are made, which are eventually filed in court as court orders, and they're recognized under the law of Kenya as a legitimate court order to settle some of those issues.
Well, I know there is a very flowery storyline around Chase Bank, one of your success stories.
Yes.
Talk to us about that, and as you do that, you may want to tell us why it is not something that should be considered, especially when it comes to these other institutions that are currently in liquidation.
Thank you, Chris. I'm sure when I look around, most of you know Chase Bank, and maybe some of you were depositors in Chase Bank, because that bank majorly banked the microfinance institution, the microfinance businesses. Talk about people doing salons, people doing hairdressing, people having their retail and wholesale shops, students. If you look at the profile of that bank, it resonates to most of the audience here. Now, that bank went under, but the beauty, you know, even in gloom, you can also smile. Now, when I talk about Chase Bank, in the gloom of the bank having gone down, at least if you had like 100 shillings, I'm giving them an example. If you had 100 shillings, when the bank went under, immediately or after a bit of time, you were given back your 75 shillings. Meaning, we gave you back 75% of what you had as deposits in that bank. Fast forward, the 25% that remained, we have paid you back a maximum of 500,000 Kenya shillings. Still, let me go back to an example. If you had 1 million shillings in Chase Bank when it went under, after some time, you were given back your 750,000 Kenya shillings. Of the 250,000 that remained, by now, you will have been paid back all your money, right? Paul said about resolution. That was the best bank that we can say we resolved today. 75% of the deposits were given back to the depositors. The balance that remained, we have paid them back to the depositors, up to a maximum of 500,000 shillings. What remains after payment of the 500,000 shillings, that is what they said the next level of defense. Our role is to collect money from people who have taken loans from that bank, right? Because I can take you back. How does a bank operate? A bank does not have its own money. A bank collects money from you and me, right? And then from that money, other people come and borrow in terms of loans. So a bank has very critical stakeholders. It has depositors, and it has people who have taken depositors' monies. They are called loanees. They have taken loans. I'm sure some of you, your money passes through a bank in terms of a salary, or it passes through a bank in terms of your normal today banking from your business. That money is put together, and another person comes and takes it in form of a loan. So now when the bank goes under, you are assured, you are guaranteed that you'll be paid your money up to 500,000 Kenya shillings. Where does the balance come from for us to pay you back? Our role as KDIC is to follow up those people who took your deposits in terms of loans, for them to pay back to KDIC that money, and then now KDIC pays that balance to the depositors in terms of, we call it dividend payout, right? Right now we're in the process of collecting that money, selling the bank's assets which were in the bank, and all that money put together in a basket and distributed to the depositors and the creditors of that bank.
We want now to take this conversation to the grassroots. Kindly take us there.
Thank you very much. First of all, let's give Crispus a round of applause for a job well done. I think by now we've understood what KDIC is, their mandate, their vision and their mission. So right now I want to come to the audience. If you do have a question, please raise your hand. The question can be directed to the panel here. So where do we start? Right here. Please introduce yourself. Tell us where you want the question to be directed to.
Why do you limit yourself to commercial banks? Because there are some other state corporations like, for example, NSSF, NHIF, and some others, where a lot of money remains for people, the depositors there. Why have you limited yourself just to commercial banks?
Now, the question is this. The premium that the banks are paying to KDIC might not be leveled, and it's not leveled. So, to what extent are you going to protect this extra expense on the banks which don't have their own money, impacting us depositors?
You have said that the limit coverage for the first time was 100,000, and now I can see you have increased it to 500,000. Which criteria are you using, or what other things are you looking that you can say now we want to increase this limit to this amount?
How do depositors who have valuable deposits get back their valuables? Because you realize that at the moment, those valuables are at the custody of the banks. And if KDIC wants to pay back their depositors, they usually do sell some of those items to realize the money that they are going to pay back to the depositors. Thank you.
This is whatever we do, there is a policy regulation. For instance, we have our law that says to the extent or to the limit to which we can protect. We cannot do everything, so we are limited to commercial banks. The institution that you walk around and see having a name, a bank, you don't need to think a lot. So if you see an institution having a name, a bank, because you cannot wake up any day and write your own business and call it a bank. So there is a limitation there. There is a law, and that's why we've not gone to NSSF. We have two types of depositors who maybe are not compensated. There are those depositors who fall within the limit. Say they are within the, you have 100,000, you have 200, you have 400, you have 500. Those people are supposed to be compensated the full amount. There is also another category, because it's not a crime for you to have 1 million, to have 2 million, to have 10 million, to have 1 billion. It's not a crime. So us will compensate you to the maximum limit, because that's the money we have. We can't give you everything. We don't have it. So the remaining amount will be compensated to what Geoffrey was talking about here, that after some time, when we go and recover the money, we realize we sell the assets of that bank. We ask debtors of that bank to bring us the money. After that, we collect sizable amount. Then we call depositors and give them the money. What are the criteria that we use? The first criteria which we use is that the limit which we want to have must cover the majority of the people. Today, for example, we are covering 99% of the account holders in this country. If you look at around, I'm sure there are very few people, even in this congregation, that have more than 500,000 in their account. So that is the first criteria. With that limit, we have protected all of you except 1 or 2 persons. We've covered 99% of you. And the other thing is we also want to look at our ability to pay. But I say that is not the only protection. Remember, that is the last resort.
We can only pay an estate of the deceased depositor. But the law also allows us, if, for example, the depositor be out of the country or be inaccessible, to come up with the relevant legal documents where you are appointed as an attorney and that is registered registered appropriately under the law, then that can be considered. If you are not available for reasons that are understandable.
When a bank goes under, the bank has a list or a record of all the persons who had valuables within the bank, right? They are not part of the 500,000 shillings because they are not monetary. They were your assets. You go to the bank and the bank definitely will give you back your valuables that you had in the safety deposit lockers that they have in the bank. Just on the watch out.
Thank you so much, Geoffrey. In the interest of time, allow me to invite our director, Paul Manga, to give us the closing remarks before we move to the CEO.
Mine is to say that, please, if you know someone who was a depositor in a failed bank, KDIC, my colleague has said where we are. You can also leave your contact there so that we reach out to that person, because it is good for us when we are able to reunite the money with the owner. So my message is that kindly, if you know someone who has lost the money in a bank that failed and is in liquidation, let's have the detail of that person so that we can find a way of reuniting that person with the money when the money is available, please.
Asante sana. Very quickly, because we want to take the CEO live to KBC. CEO, over to you.
In closing, I assure you that KDIC is dedicated to being a proactive partner in your financial journey. We will continue to engage with communities across Kenya, even as we invite you to reach out to us anytime with your questions, concerns, or suggestions beyond this forum. Together, we can ensure a more secure financial future for all Kenyans. Erokamano, Homa Bay. Oriti.
So once again, kindly help me appreciate our CEO for those very, very engaging remarks and taking us home. On behalf of the panel, kindly allow me to appreciate them even as they exit the stage. This has been the KDIC Town Hall Meeting County Edition of Homa Bay, of course in partnership with KBC.